Welcome to Market Peaker. The moving average convergence divergence is a powerful indicator for understanding momentum and trend changes. Today, we'll break down how it works and how to use it in your trading strategy. What is MACD? MACD consists of three components. MACD line, the difference between two exponential moving averages, usually 12-day and 26-day. Signal line, a 9-day EMA of the MACD line. Histogram shows the difference between the MACD line and the signal line, providing a visual representation of momentum. How does it work? Crossovers. When the MACD line crosses above the signal line, it's a bullish signal, a buy. When it crosses below, it's bearish, sell. Zero line crossover. If the MACD line crosses above the zero line, it signals an uptrend. Crossing below indicates a downtrend. Histogram analysis. A growing histogram suggests increasing momentum while a shrinking one hints at weakening momentum. How to use MACD effectively? Identify trends. Use the zero line and MACD signal crossovers to spot trends early. Confirm signals. Combine MACD with other indicators like RSI or support and resistance levels for more reliable setups. Avoid false signals. MACD works best in trending markets. Avoid relying on it in sideways or choppy conditions.